Hello, my name is Jesse Garcia with Keller Williams Realty in Elk Grove, California. This is the second series in our video blog series, The Information You Can Use. Today I'm joined by Schriever with Unity Financial Solutions and with Mr. Chad Focht from Prospect Mortgage.
Thank you for having us. Thank you.
You're very welcome.
Fabulous.
Well, let's get right into the meat of it. The real estate market right now is very unstable. Interest rates are unstable, but right now, home prices and interest rates are at historic lows because they're both low together.
Yep.
What are interest rates doing? Because they can make or break a deal. It can make somebody go from qualifying for a home
to not being qualified.
Exactly, exactly. So what's going on with that?
Well, interest rates in December we saw climbing up quite a bit. The Feds have been subsidizing and keeping interest rates artificially so low. So basically, they're running out of money. They allocated $1.2 trillion into the market. They've spent already over $1 trillion into that, which a lot of our consumers don't know. Outside of the initial stimulus plan that was put out. So we saw interest rates in December kind of go up a little bit, which is kind of weird because now in January we've seen those interest rates come down. And so we think it's because it's hit a ceiling, but what's happening is once that money runs out, the government can't keep putting money into the market. It's going to be gone. So just because they came down this month a little bit, I think what we're going to see is by summertime you're going to see those interest rates really start to creep up. From what we're seeing, we're thinking those interest rates are going to be maybe 6%. Obviously, that's a guess. We can't all be right. Otherwise, we'd be all millionaires. But
wait, aren't you a millionaire already?
I wish. So it's just something that we're looking at, and obviously, there's the way the market is right now, where bonds are, where the stock market is, interest rates, and where the home prices are. Interest rates should not be this low. It's totally unbalanced. And it needs to balance itself out.
So back to that $1.2 trillion that the Fed has injected into the mortgage-backed securities, if I'm right. When do you anticipate that money being gone? I've heard March, I've heard April, I've heard May. Is that kind of...
That's what we're hearing too. They're doing auctions, so that money it's up to them, really, right? We expect that money to be gone before summer. That's what they're saying, but who knows, they could hold on to it a little bit longer.
Okay, so Chad, going into FHA guidelines, right now the market is so depressed, you have low home prices, you have low interest rates. Interest rates and home prices won't stay that way forever, but also FHA guidelines are changing. Down payments are going to have to be a little bit higher. FICO scores are going to be higher. Tell me a little bit more about that.
Well, as far as the down payment's concerned, that's not something that's finalized quite yet, but it is something that we expect to come possibly by summertime, maybe a little bit later. They're talking about taking that to 5%. So right now it's at 3.5%. Example, $200,000 purchase be $7,000. The good thing though is your tax credit is $8,000. So you're essentially making $1,000 to buy a house. Your down payment is free. So that's a definite plus. The other thing is your FHA mortgage insurance premiums are going up. So typically what happens is you pay a 1.75% upfront mortgage insurance premium that's financed into the loan. It's considered a closing cost, but it's financed. So you've basically got two loan amounts on an FHA loan. That's going to be going up to 2.25%. To give you an idea, it's not a huge difference. It's about $5 a month on a $200,000 purchase is what it equals out to.
Okay, so besides the federal tax credit, like Norm was saying during the break, where's the good news in this? Interest rates are probably going to be going up in summertime. You have FHA guidelines changing in the summertime. Yep. I mean, there's so much. I mean, you're saying, and I completely agree with you, now is the ideal time to buy a house.
Absolutely, absolutely. There is not a better time to buy. You're talking about interest rates during the boom when prices were double what they are right now, yet you're getting an interest rate where they were then.
Yeah.
Right? So you're talking about buying a house at $200,000. It was typically, in Elk Grove anyways, $400, $425. Right? So you're getting a 50% discount on the house. Not to mention what we're finding is that what you're buying the house for is typically less than what it costs to even replace the house. So what you'll find is when people go get their homeowner's insurance premiums done, they'll buy a house at $200,000, but it'll be insured for $230,000, $240,000, because the cost of the house to rebuild the house is going to cost that. So essentially, when can you buy in any market? You can buy the house for less than what it costs to build.
Chad, thank you very much. We're out of time.
Thanks for having us.
Appreciate it. consumers want to contact you, what's the best way?
Best way is either email homefinancing@chadfocht.com. That's CHADFOCHT. My cell phone 916-798-1234, or my website chadfo.com. CHADFOCHT.
Thank you very much. Thank you, Norm.
Yep, no problem.
My name is Jesse Garcia with Keller Williams Realty. You can find more information on my website, jessegarcia.net, and you can call me at 916-480-8366. Thank you.